Thank you for joining us for instalment number 4 of this tax video mini-series hosted by Comprehensive Tax Planning, and my guest throughout is Sean Hughes, who is the principal. And Sean, in this instalment we're going to be talking about stamp duty, land tax savings. Before we go on to that, I was just interested to know, is there a kind of typical client profile that you deal with?
Yeah, I would say kind of husband and wife couples mainly, in the 40s and 50s who've built up a significant portfolio. The tax changes have impacted them over the past 5 years. What do they do to rectify that? We also work with kind of people who start out on the stamp duty front, as we'll talk about in a moment. But typically, yeah, it is that kind of married couple in the 40s and 50s who are got one eye on inheritance tax, one eye on restructuring. They're our main clients, really. Yeah.
And you can only restructure once for somebody, and this is why we're going to move on to stamp duty land tax, because this is an area that you've started to move into since the 3% surcharge was brought out for property investors in April 2016. And we know from the forums that there's a lot of confusion about when this 3% surcharge becomes liable, and the often answer is, oh, go and ask your solicitor, but in fact it's actually somebody like you that can answer that question better.
Yeah, absolutely. It's a funny tax, really, stamp duty. It kind of falls between the gaps because most landlords who I speak to think their solicitor should look to reduce it for them, which kind of makes sense because the solicitor is obliged by the Law Society to prepare the stamp duty return. Yeah. But if you ever look, or an investor ever looks at their engagement letter with a solicitor, it says the solicitors don't give tax advice. If you want tax advice, seek it independently. But how many investors watching this have ever picked up the phone to a tax advisor before buying a property to make sure that they're paying the right amount of stamp duty? I would say it's probably less than 1%, to be quite honest with you. Whereas, like you say, since April 16, it should be all the time, unless you're buying something very vanilla, a vanilla buy-to-let, and if your solicitor's charging you the 3% stamp duty, probably fine, just go with it. But if there's anything just a little bit out of the ordinary, then just pick up the phone to someone like me, and it would be a 2-minute conversation. I'd probably ask you 5 questions, and then I'd say either, yeah, you're paying the right amount of stamp duty, crack on with that, or, if you structured it like this, we might be able to reduce it, or you shouldn't be being charged the 3% because of X, Y, and Z. And then we'd work with the solicitor to, report the lower amount and therefore pay a lower amount, and the money's in the landlord's back pocket rather than with HMRC.
And you actually would supply a letter to the solicitor with your what you believe the stamp duty land tax is payable for that particular transaction?
Yeah, absolutely. The solicitor, normally they just don't want to get in trouble with HMRC, so they charge the highest amount possible in some circumstances. Now, if an investor comes to me and I say, oh, well, actually, it should be a lower amount because of X, Y, and Z, what then happens is I pick up the phone to the solicitor, just because it's easier to talk it through initially, give them the reasoning, backed up by legislation and guidance, and then they normally want something on letter-headed paper for their file, so that if in 2 years' time HMRC turn around and say, well, why did you charge that amount of stamp duty? They can say, oh, they took independent tax advice from a chartered tax advisor. So that's how the process normally works. If people have paid the higher amount of stamp duty and the transaction's completed, we can normally go back either 1 or 4 years, depending on the circumstances, and reclaim that money from HMRC. Now that's quite good because the investors paid the stamp duty, HMRC have got it. If we then write to them with our rationale as to why it should be repaid, and it was overpaid in the first place, HMRC are only going to repay that if they believe it should be repaid. So then it's quite safe for the landlord. They've got nothing to lose in effect, because we work on a no-win, no-fee basis. So if we write to HMRC and HMRC say, no, you're not entitled to anything, we don't get paid. But if the investor does get some money back from HMRC, we take a percentage as a commission.
So there's nothing to lose. And as you say, we've had 5 years now of the 3% stamp duty surcharge. So if anybody watching this is in any doubt at all that maybe they overpaid, it's worth having that conversation with you, because it's a conditional fee basis, and you would only charge a percentage of something that you got returned to them.
Yep.
And does HMRC pay interest if it turns out they've had your money for a period of time?
They do, yeah, only a very small percentage, as you can imagine, but yeah, it's kind of minuscule normally when people get it back. But yeah, so that's what we do. And the scenarios that people are looking out for where we can do these reclaims, a main one at the moment is if you've bought a property that was not suitable to live in on the day that you bought it, and the acid test there is, just think, would you live in that property? On the day you got the keys, would you go and sleep in one of the bedrooms if you put a bed in there? And if the answer is no, then you probably shouldn't have paid that 3% stamp duty. Now, obviously, the legislation is not that broad. There's loads of little bits of detail that need to be met or not met, but they're the kind of circumstances where we're doing a lot of reclaims at the minute. Also, if you've bought multiple properties in one transaction, there can be ways of reducing the stamp duty entitlement there, because there's a relief called multiple dwellings relief, or any type of mixed use property, so a shop with flats above it. That's a very common one at the moment. The way that multiple dwellings relief works in those instances where there's a shop or an office, a commercial property, and more than one dwelling above it, or included in the transaction, there's a lot of reclaims there at the moment, because HMRC tidied up their guidance in relation to that a few months ago. So that's another area where we're doing a lot of work.
Yeah, just going back to the uninhabitable property one, that was a landmark case fairly recently, wasn't it? Where a couple had bought a house that was completely, you couldn't live in it, it was virtually derelict, and they won this case and kind of set that precedent.
Yeah, they did set a precedent, yeah, so that was back in January 2019 now, so a couple of years ago. Now that's quite an extreme example, but you're absolutely right, it set a precedent. Now in that example, there was kind of holes in the ceilings, asbestos everywhere, and I think, if memory serves me right, they did end up knocking the property down.
Yeah, that's right, yeah.
It's called the Bewley case. But I think that was quite an extreme example, like we say. Even if your property was not in such a bad condition, again, going back to that acid test of would you put a bed in there and sleep in it on the day you complete on the property, even if it's not in that bad of a condition, we can still reclaim it in some instances. And like I say, we write to HMRC where people have paid it already, provide them with the evidence as to why we believe it was uninhabitable, and if they don't agree with it, they're not going to pay any money back.
So I think the messages from this is, if in doubt, if you think you may have overpaid your stamp duty, the 3% surcharge, is just to get in touch with Sean's company, and you will chat through their situation and see if there's a possible reclaim there.
Yeah, absolutely. And I think underneath this video we'll put a couple of examples of instances where we can reclaim it. The ones we've discussed are the main ones, but there's a couple of more intricate ones as well. But yeah, get in touch, yeah.
Fantastic. Well, it's always good to know if there's a possibility to reclaim some tax. So you've got absolutely nothing to lose if you think you have overpaid that 3% stamp duty surcharge, to get in touch with Comprehensive Tax Planning. And it sounds like you're kind of developing quite a little niche there with this type of work.
Yeah, absolutely. I mean, I talk to hundreds of landlords every month, client referrals, discussing their properties with mates down the pub when we could go to the pub. But yeah, we deal with a lot of people like that. And yeah, it's just, like I say, a 2-minute phone call can save you thousands of pounds. Just pick up the phone.